Good morning, ladies and gentlemen. I hope you're having a fantastic day. Welcome to Market Mornings. My name is Robert Roy. I'm your host. Market Mornings being brought to you by WealthBuildersHQ.com. Let's go ahead and make sure you all can hear me. If you please type the number 1 in the comments section or the chat box to let me know that you can hear us, I would greatly appreciate it. I really don't want to talk to myself for the next half hour or so. That would never is fun. Thanks, everybody. I appreciate that. And as you do that, keep in mind that everything we look at is for educational purposes. Nothing's meant to be advice or recommendations, okay? Here's the various social platforms that we've got out there at this point, folks. We're adding new ones all the time. Make sure you're following along with the various things that we do out there. Keep in touch with us by subscribing to these, ring the bells, get notifications so you know anything new that's coming out, the latest and greatest. Today's agenda, we're going to look at upcoming economic reports. That's a joke. We'll see. You'll see what I mean in a minute. Futures. After that, then the previous day's trade. So start lining up the trades you did on Friday. Go ahead and start dropping them puppies in the links in the chat box of what you did. Today's candidates, and then, of course, we'll end it up with the stocks that you are looking at trading today. All right, so with that, let's go ahead and jump in. So we'll start off with the economic report. What do we got today? Let's see. So we've got congressional elections tomorrow and nothing else before then. Right, nothing on Wednesday either. So it's normal to not try to have one report sway the market one way or another. Really bad report on earnings or on economics or the CPI, whatever. They push it all off, so nothing comes out here. We don't have anything until Thursday really to be concerned with. I mean, elections, of course, on Tuesday, but we're not going to have any indication of what's going on until the wee hours of the morning. And even there, we're not going to really know in many places because of recounts and too close to count and all that good stuff, right? So there we have it with economic reports. So let's go ahead and take a look at the futures. All right. So it's kind of a mixed bag today. We are on different futures. We're up 8 points on the ES, which is the S&P 500. We're up 72 points on the Dow. We were up a lot higher than this a little while ago. We're up 24 on the NASDAQ, 7 on the Russell, down below 21,000 again on Bitcoin to 27.75. Ethereum is down 70 points, puts us at 1581, back under 1,600. Gold is at 1,680, up 3 points. And crude, we're at $92 a barrel. Woohoo! That's exactly what the U.S. needs is higher prices on gas, isn't it? We all need to spend more money on frickin' gasoline. And my oil contracts are getting ready to be negotiated. For our heating oil for our home. We don't have gas here. And we know someone that just recently negotiated and they got almost $5 a barrel last year, $5 a gallon. Last year, we were at $3.19 was our rate that we were able to negotiate. So you could see on the ES, we were up a little bit higher and we've rolled off so far this morning. So all the news on CNBC was, hey, the change in election is causing the market to go up. Yeah, it's not up as much as it was, so we'll see. All right, from here, let's go ahead and take a look at trades from Friday. So I'm going to ask you guys to drop your trades in from Friday. Remember, what is this all about? It's about accountability. What did you do? Are you partaking in the markets? I don't care if it was funded or funded. It doesn't matter. I'm not asking that question. What trades did you do? If they're non-funded and you're doing it the right way, man, just hit that enter button. That's what you got to get good at, is hitting enter. The number one success factor we have in our one trade away challenge is we're forcing people to hit enter. And if they do that, when I say forcing, we're telling you to do it a lot. If they do that, we're seeing success come out of that program for them. If they don't hit enter, then you're not going to be successful. Hit the enter button. Do it now, hitting the enter button of the trades that you guys dropped in. All right, or did. Friday was a crazy day for me. A lot going on. The only trade I took outside of my covered calls, I always manage all my covered call positions on Fridays. I manage my naked put positions on Fridays. I buy back. I roll out to the next week. I do that on Fridays. And the reason behind that is by doing so on Friday, I'm taking advantage of theta burn over the weekend. If I sell my position on Friday, it's going to lose time value on Friday to Saturday, Saturday to Sunday, Sunday to Monday. It drops, whatever the theta is, it drops that much per day. Just in whether the stock moved or not, it doesn't make a difference. So I take advantage of those on Friday. So I did a bunch of those on Friday, as I always do. And then on selling positions, we're looking at, let me just start this up. Give me a second. 3, 2, 1, pause. All right. So right here on Friday, we broke out of the pivot point level, this yellow line, PP, 261.70 level, okay? And broke out, came back, bounced, took the entry, did not use the midpoint as an exit because it was too small of a number. We're only looking at going up to 263-ish or so. I can't tell with my mouse there. But we only had a little over $1 move in there by the time we got in and the time we got out. So one candle, we were in and out of that trade. It brought in about 70 cents on the option. So I was very happy with that. I did not have time to look at it beyond that. And even if I did, watch, let me show you this. Oh, boo, that looks like a flat line. All right. Look at the distance in here on the pivot points that I took. I took between these two pivot points right here. All right, look at the size. Nice. Now look at the size of the pivot points in here. Tiny. Not interested. And I wasn't watching, 10:30 in the morning to look for the next breakouts for it, right? Which brought it up in here, which gave us a better range. This is just too small for me, so I'm not interested there at all. Yeah, one candle, but just not my cup of tea. Right? So that's why for me it wasn't something I was looking for. Let's see what you guys got in there. So Erica said Square $603 profit. Very nice. I like it. That is awesome. That was from Friday's trades. Good job. I love it. Robert said Friday not the best. Losses in SPX, Amazon, PayPal spreads all were knocked out. 1,000 shares of PayPal were assigned to me. I got assigned some shares of Google this week, which I'm good with since I bought them about $8 less than I would have bought them at the day I wanted to get them. So I'm very happy with that. Don and Chris said, hey, good morning, guys. SPY, $482 profit. Very nice. Let's see. Erica said, I referred someone to Wealth Builders. Do you think it's best for a newer trader to start with the one trade away challenge? Yes. Yes. Erica, I'm going to tell you, we have a student. His name is Chris. He comes in here once in a while. And he'd been trading for years, followed me. He'd done okay. Came from another company, followed me, did okay. So he's got experience in the market. He went and took the one trade away challenge, and he's blowing it up. He came into one of our trainings not long ago. I've not seen his brokerage statements, but said he hit his first 6-figure week ever. Week, not year, week ever. And it credits all of it back to the one trade away challenge, right? So will a brand new person or will anybody else have those same results? No, I can't guarantee that. But I'm telling you that I'm seeing amazing things come out of one trade away challenge. And for $49 for that 30 days of training, well worth it. So yes, perfect. And I appreciate you referring someone to us. Say hey said SPY $1,890. Nice. Good job. Trip said I got my Iron Condor on AMD, but I only got 22 cents of the premium this time. Okay. So we get what we get, right? And that's all we can do, Trip, right? So if you took the right trade and you followed all the rules and you got the premium you got, there was no way of saying, well, no, I'm going to change things now and make 50 cents of premium instead. Well, I guess you could do that, but there's no way of doing it effectively and still sticking with your system, right? So kudos for following your rules on your system, right? Good job. All right, so with that, let's go take a look at today's candidates. So we don't have a lot of stocks today. So remember to get your stocks prepared of the ones you want me to take a look at. Apple is going to be the first one on our docket. They came out and talking about shortages of their iPhones coming out less than they were expecting. They're down $1.85 to 136.5. So much for this massive move last week, right? Oh, our earnings are great, except, right? So right now, let me see. I'm going to pull this fib out. And we've got a Fibit in here. And we definitely need to look at a place to redraw. I'll do that Tuesday in the in power option plays. So 28.34, we're still fine there. We don't need a new Fibit here. We don't need anything else here. We're below the negative 618 is the only reason. So right now, if we're sitting at 136.5, we are still above that 134. We're looking at 141.7. We do not need to split that level, folks. So what we're looking at is a bear call spread above 142. Let's see, we got $1 increments there. Yeah, we'll go above 142 or a long option. Right, long puts, long calls, whatever it is you want to trade on it. But I trade Apple all the time. I'm going to look at Apple as a potential daily trade with this kind of move as well. Right, BNTX is our next one. They had earnings come out. They are down $3.79. I'm sure they're just not getting all the vaccines they thought they were going to sell with all of the craziness that's out there right now. They had a nice move into a bullish bias. That was a great gap up. But from that earnings, and they're just not holding up well. So they are down to 150.5 right now. So we're just above that 149 level. So we're going to look at a bear call spread above 156, which takes us right above this fib line here, right about where we tapped out on Friday. Berkshire Hathaway. BRK.B or _B, depends on what platform you're with. These are the B shares and not the $500,000 A shares, right? It was earnings for them. For Berkshire, they are up $3, 290.5 right now. So we broke through the 289.5 level. We're just $1 above there. Tough spread right below that. So here's what I'm going to say. We're going to look at a bull put spread below 289, but we're going to do it aggressive, meaning taking less contracts. So to get below 289, we got to go to 287.5, right? It is where that's the next closest level for us. All right, then we have Costco, C-O-S-T, Costco. All right, so Costco, they are downgraded by Wells Fargo. Right now, Costco is down, $8 on that news, baby. Not good. Not good. That puts them at 478.5. So the nice thing is we're below that 484, above that 469. So we're kind of in that range right now, and we are in bearish territory, which makes it even better. We're going to look at a bear call spread above 484. So if we look at this one just as a educational opportunity, how about that? We're going to look at a bear call spread above 484. So we're looking at 485s more than likely, all right? So right now, the 485s, if we sold that 485 position and we bought the next higher strike is 487.5, that's what we were at, $1.10 credit on the natural, 142 if you go to the mid price, okay? So naturally, if I leave them at their regular prices, I'll get $1. If I try to negotiate, we're going for $1.42. Well, we've moved $8. So it's kind of tough to say, ooh, this is our numbers, right? So instead of, I'm going to write this down, 110, 142, okay? That's the natural and the mid. So if I remove these two from here, and now look at this and say, all right, if the stock price has changed, it's moved, right? Let me go ahead and grab a different color here. Let's see. Let's get something that's not white. How about yellow? Okay. So because we're down about $8 right now, so if we were looking at the one, 484. So we said 485, 47.5. That's what we were looking at before, right? So we're going to sell this. Well, if we move out about $10, actually, we can go out, they're 250s, we'll go out $7.50, right? If we go out 7.5 and we sell the 492.5 and the 495, well, why am I doing that? Watch, right? Let's go ahead and we're not really doing these strikes. We're going to do the 485, 487 half, but we're going to do the 492 half is going to become our selling position. And then our buying position is going to be 495. Okay. So you see the credit that's down there? We were getting 65 cents. This is based on the move that we've made, what the expected pricing will be right now. So my guess, and that's all this is, my guess is we'll get about 65 cents to 88 cents on this position when the market opens. It's a pure guess. It's pure speculation, but it's math. It's just based on the move we've made. What would the spread have been had we looked at it there? That's all it is. So it's not a great premium, but if you get 50 cents, remember this, 50 cents is 25% on a 250 spread, right? So you have 50 cents of profit, $2 of risk. You have 25% rate of return there. So overall, I like it. All right, we've only got 3 candidates left. This is where you drop in your candidates that you want me to take a look at for today. Doesn't matter what the stock is, drop it in. I will do my best to analyze it. If you tell me what you're looking at, what you're looking for, are you bullish? Are you bearish? Is it a spread? Whatever, if you give me some of that indication, I can help guide you in that path. If you just say Apple, I'll look at Apple. Not a problem. And I'll tell you what I see. But don't give me Apple. We did Apple. Actually, I'm not kidding. If you missed it or you have other questions, hey, can we do this on that? Yeah, ask them. All right, DoorDash. They got upgraded by Oppenheimer. DoorDash right now is up $1.35. They're not knocking any doors down. Ha, ha, ha. No pun intended. But if they're sitting at 53 right now, so we're going to look at, well, what do we have here? 49 to 57 is 8. So we're right there. We don't really need a pivot. It's really 7.5. So, and our pivot's 7 3/4. So we're okay. We don't need a pivot there. But we're going to look at a bull put spread below 49. All right. By the way, Costco, we wrote bear call spread above 484 or a long option. And this is Rob, right? Three of my 20 candidates are on our list today, and we only have 7. So 3 of my 7 candidates that I picked out for us today are all on my regular list for power option plays. All right. So DoorDash, there we go. Next is Meta. This is the last one on our list. They've got layoffs coming, potentially thousands of people. They said that they have hired thousands of, they had a very large hire, thousands of people on top of the normal staff through COVID. Obviously, we've seen what's happened through COVID. Sales are off, iOS fault, whatever you want to call it. Not good, but they've dropped down to under $100 from about 91. And right now they're at 93.5 on Meta. Let's unscrunch that. There we go. 93.5. So we still don't need any Fibbits in there, so we're good. So 93.5 just barely puts us above that 92.33. So here's what we're going to look at. I'm going to look at a bull put spread below 92, right? Or a long call. What am I looking for in a long call? Well, here's what I want to see happen. We're at 93.5 right now, ish, 93.63. So we're up here somewhere, whatever it is, right? So pre-market, we've moved up here. What I want to see happen is a pullback somewhere around that 93 3/4, 93 half. 92 3/4, 92 1/2 pullback. You don't have to go all the way. I'd love it if it does. I actually love it when on this candle's pullback kind of looks like this with a wick that broke down and we start bouncing. And this says a bullish candle, let's say. That's my entry candle right there on my 5-minute candle, right? And then I would put my stop down here. My target would be just under that $100 level. So actually my second target would be at 100. This would be T2. My first target would be halfway through. So we're looking at 92 to 100. So approximately 96 would be my first target on the bounce, and 99 would be my second target on the upside, right? There we go. All right, so that's Meta. Last one. Drop your candidates in, folks. What do you want to see? OKTA. Let's go back and get a bigger picture of it. So OKTA got an upgrade. I didn't write down who it was, so it wasn't important. But they're up $1.68 on this upgrade to 46.70. So let's see, 44 to 58 is 14. Oy. So we need to put in a -136 and a 118. So let's go do that. So we're looking at 6 points, 7 points. Yeah, good. Let's see, down here, 51, 58 is 7. We're good. We don't need another fib in there. Perfect. So right now we're at 46.70. So we're going to look at a bull put spread below 44. Perfect. All right, let's see what you guys have. So Karen's asking for ideas on SPY. So let's go ahead and shift this over to all symbols. So this way I can get a look at Fibbits and Wilder's average true range and good stuff like that. So SPY right now is up 77 cents. Not really excited about what's transpiring there. If we go back and look, just out of curiosity, we're up $8.50 in the pre-market on the ES. Okay, so which is still a decent move. 8 points, 8.25 points, 9 points right now on ES. So we're at 377.25 on SPY. Right, so let's take a look. So that puts us 377.25. So we're just below that fib line, Karen. Right. So where's our concern here? Where's my concern here? Is we are bumping our head on ugly right now. What does that mean? We've got resistance, major. You know, yes, we're above the 21, but that 21 is right there. It's still acting as a focal point for traders. They see it there, right? You know, between the 21 and the fib line and now the 8, there's a lot of strength there. So to me, the natural would be a break to the downside, right? We're in a bearish bias. Actually, we're in bearish neutral bias on SPY, barely. We went through this in depth over the weekend in power option plays because it was an anomaly of where the S&P 500 was in a different bias than what the SPY is, all because of a 20-cent difference in the price based on where the moving average falls. That's how close it was to being the same. So the move to the downside would be great. Now, if we can get the break to the upside, Karen, and we get above that 377.93 level, break above, retest, and bounce, you've got an open sky to the upside to that 384.39. I would exit half the trade about the midpoint on either one of them, up or down. I'd exit half the trade at the midpoint. All right, I hope that helps. Let me know down below. Robert said, let's look at PayPal, PYPL. Let me see. Robert continued to say, since I own their stock now, looking for selling covered calls or cash out, your thoughts. Okay. So PayPal, where are they right now in pre-market? PYPL. So they're up 42 cents right now, Robert. Right? So if they're up 42 cents, so Robert, what was your exercise price? What price did you buy them at? That'll help me understand or look at what we're looking at here on the option chain. 75. Okay, good. So you're kind of at the money, Robert. We're looking normally at a 41 delta. 40 delta. 41 is what happened to be there. We're looking at a 40 delta. We pushed the envelope by making this 41, by using 41. I would probably personally drop down to the 35 delta, which is the 78 strike. So you could sell that $78 option for $1.21. So if you were selling that, Robert, say you got $1.20 for it, right? Someone could take the stock away from you at $78 and you just bought it at $75. So you are $3 to the good there, but you're going to take $1.20 in for doing so. So you bought it at 75, you sell it at 78, you're really selling it at $1.20 higher than that, so 79.20. So I would look to write that 78 strike. Now keep something in mind, all right? It has a 35 delta. What does that mean? So Robert, and for everybody, that 35 delta is a probability calculator. It tells me, and I quote, there's a 35% chance that this option will have cash value on expiration date. not before, on expiration day. What does that mean? The stock could close at 78.01. It has cash value. The stock could close at 90. It has cash value. There's a lot difference of what the cash value is in there, right? You may find that you sell it at $1.20, and on Friday, the stock gets up right about 78, and you got to buy it back for 40 or 50 cents. Okay, so I buy it back, and then what? Then I look at next week. I go to the next 35, preferably anything under 40. Unless I really want to hold the shares, then I'm going to go down closer to 20. Again, personally, how I do it. But if you can pick up $1.20, we'll call it $1.25 because it's real easy math for me. If you get $1.25 a week, you're talking about $5 in the course of a month on a $75 stock. What in the world does that come out to be? Think about this. Guys, if cash in is $5 divided by cash out with 75, that's a 6 point. I don't like that number. It's a 6.5% rate of return per month on PayPal. A little rinky-dink nobody, price-wise anyway, right now, right? A lot of importance in what their technology is. Important company, period. But that's how I would look at it, Robert. Did that make sense? Was that helpful, Robert? Is that any other questions on it? Any of you, folks, this is the way to crush it with the Wheel of Fortune. Very simple. Sean, make a note. We need to do a video on Wheel of Fortune and put it up on our training. On Trading Like a Boss. So Wheel of Fortune basically says the very first thing you do is you sell a put. When you sell a put, you get cash. You're not paying money, you're getting cash. So the first trade, you got paid, right? Ultimately, someone's going to make you buy the stock. Sooner or later, you're going to have to buy a stock. So you got paid and you got money in your pocket. That's the first time, money in your pocket. How to spend money, you have to buy the stock now. So we have one time where we made money, one time where we spent money, right? Now the stock, you own the stock. What are you going to do? Just sit on it? Did you buy a house and hope it appreciates and you sell it later? No, you rent it out. So I'm going to rent it out. One time I had cash coming in, one time I had cash going out. Now I rent it out, I have cash coming in. That's number two, right? And I'll continue to do that until what? They take the stock away from me. When they do, they're going to give me cash. So I have cash coming in a third time. One time I spend money, 3 times I get money. And now what? I do it all over again. Same stock, different stock, it doesn't matter. That's the Wheel of Fortune. Sell a naked put to acquire the stock, to rent it out, to have the stock taken away, and keep that cycle going again and again and again. The key there is all about using stocks. Right. And Robert said, and I have 1,000 shares, so selling 10 calls. Exactly, Robert. So now you're talking about $1,200 coming in today on your stock. And if you're exercised and you made that $3, just say it's only $3 per share, that's an additional $3,000 on that profit as well. So you got $4,000 up on a $8,000 purchase, right? Nice. Very good. Let's see. So I'm guessing that's good, Robert. So excellent. I appreciate you sharing that. Erica said, I'm currently in a bull put spread on Goldman Sachs expiring 11/18. I am really nervous. Thoughts on Goldman Sachs? All right, so let's take a look at GS. You're in a bull put spread. Strikes, please. Erica, what strikes are you? What did you sell? How about that? That's all I really care about is what strike you sold, right? Because Goldman Sachs is doing well. Unless you sold something that is way out, meaning intrinsic value, cash value. Unless you did that, then I don't really see it as an issue. But I digress. So where is Goldman Sachs right now? Let's get that while we're looking at what we've got there. So Goldman is up $1.50. So Erica, again, I'm not sure what strikes you sold, but right now we're sitting at, let me get my option chain back up here. Let's put it back where I can use it. All right. So Goldman Sachs right now, 359.5. So they got above the 358.5 level right there. So I like that. So I like Goldman Sachs. We're not showing any signs of weakness yet. As long as it maintains on this trajectory, it depends where your strikes are, Erica. If you sold a strike right here, kind of an at the money option on Friday, then you may have a little bit more risk to contend with. If you're down here at 349, you're in great shape, right? You're in fantastic shape. It all just depends where you sold that spread. So I like it depending on where your strikes are, right? I hope that helps. Let me know down below. And Erica said, did you say a long call on Apple? So it would not be a long call. I just said the word long options, Erica. There's a strike, so I'll check that in a second. So I just said a long option. I would be looking at puts unless the trajectory changes and they start to bounce off of the news. Yes, by doing so, we're going to increase our profit per phone, though, and blah, blah, blah. Unless some reason for them to bounce. What I'm saying is Apple is one of the stocks I will look at directionally, but puts is the first thing in my mind. So right now on Goldman Sachs, Erica has the 340, 342 half puts. So Erica, you are, goodness gracious, you're way down here. So Erica, next question. What did you sell them for? And what are they worth right now? So let's see, 40. I can do the net right now. Let's see. So if we're looking at the 340, 342 and a half put. So you sold the 342 and a half put and you would have bought the 340, right? Right now, so depending on what you took in, Eric, I mean, right now they're showing 14 cents is your buyback price. If I could get out of that thing for 15 cents, and that's mid-price 20. Yeah, it's the opposite. I did it as a credit spread. That's why I didn't do it as exiting the trade. So it'd be the other way around. This is the selling portion of it. So right now, I mean, you're looking at 86. So 12 and 14, 28. Yeah, 28. So about 28 cents you can get out of the trade. I'm not sure how you're down 78.50 unless they're basing it on the natural price or there's a wider bid-ask spread right now showing. So if we look purely at the chart, Erica, right? If we're above that 358 and a half and we remain up there, your options, you said, let me make sure, 340, you're all the way down here, Erica, right? You're way down here. Remember I said if you're below the 349, you're good. You're even down below the 8 moving average. I mean, you got a lot of protection on the downside. Doesn't mean it can't drop. You still have to monitor the position. If I were in the trade and as a non-funded trade, I'm looking at this going, how concerned am I that it shows negative P&L, yet I am in a great spot on the chart. The P&L could just be a mistake on the chart, on the platform, just by the way they record it. A lot of times, Erica, be careful. A lot of times, depending on where you're looking at the P&L being down, it could be based on the last price. This option may not have traded in 2 days. And it's going off last price. So you got to be careful of where they're pulling the numbers from. But go into and look at each option of what you could buy back the one that you sold and what you could sell the one you bought it for. And to me, I like the pattern. I like where it is. If we break back below or start failing below that 358.62, you may want to, pay more attention to it. But right now, I think you're looking okay as long as we step above that 358 and a half. All right. Hope that helps. Let me know down below. Hey, LK, good morning. Good morning, good morning, good morning from Colorado. Yeah, we got a bunch of our students coming out of the Colorado area. Scott and Will, who are both in our inner circle. Suzanne, who came here for the Trader Super Summit meeting with both of them. So all three of those Coloradoans were chatting it up there. So, all right, excellent. So good questions today, guys. I hope it was helpful. Make sure you go ahead and keep your eye on what's going on with the markets right now. Very close attention. Elections, you're going to hear a lot of oohs and ahs that are going to shift things around a little bit potentially over the next 2 days. So keep cautious there. Short-term trades, I'd be very careful holding overnight and on Tuesday unless it was I don't care money. I'm willing to risk this money. Other than that, I'd be very careful. You just don't know where the upsets come in one way or another. It may be expected that the market's going to go up one way and it doesn't go up and so forth. So just caution there. All right, everyone, have a great rest of your day, and I will see all of you at our next update. Take care. See you then.